and Jayakumar, MD and Group CEO of Prime Securities, with us on the show this morning. Jake's great speaking with you, and always a pleasure to have you with us here on NDTV Profit. You have this fantastic note on global volatility, which we'll talk about in a bit of detail. But I want to start with an overview from you, because we're speaking at the start of the Navratra season. You have these GST cuts coming in. Markets seem to have shrugged its shoulders and moved on. Why do you think so?
Well, actually, the good news is that a lot of the bad news is already in the price. A, our markets haven't been performing vis-a-vis their global peers. B, we've had the worst, I feel, of tariffs and tariff-related rhetoric, tariff-related bombast, which has been sort of played out. We've had sort of sobering noises in terms of people wanting to now talk about a deal that could happen. So we've gone through the full circle. We've had earnings disappointments, and now we have a situation where corporate balance sheets are as deleveraged as they've ever been. The private sector capex, in a sense, the greenfield capex is also beginning to start off as one of the things that was not there over the last several years. It was largely the public sector that was carrying the way forward. Keeping all this in mind, inflation is under control. Liquidity is very good. RBI is going all out to provide ample and more liquidity to the banking system. And in that context, I mean, really, I would say that it's a confluence of multiple factors, and especially the global tariff play out that's happened over the last several months. And I think paradoxically, providentially, whichever way you look at it, we could end up with one of the best deals, though that doesn't seem to be on the anvil in terms of case facts today. But I do believe that when the dust settles, India will emerge with a reasonably good tariff deal with the US. Apart from, of course, multiple bilateral FTAs and bilateral treaties with a whole bunch of trading partners, possibly this could mark the beginning of, and the final fling came in the form of some degree of fear amongst the IT majors, the H-1B issue, which may be the harbinger of other things to follow, though the IT sector, I believe, is more beset with issues of how AI will disrupt it rather than many of the other issues regarding tariffs, etc. So in the short run, I think most issues have played out. We are still short of an all-time high, which the other markets have convincingly made, and especially the markets in the US, the Nikkei, for instance, the European markets are hitting new highs consistently and scaling new peaks. So from that perspective, India too should follow. The catch-up will be there. And with the GST moderation and the GST rationalization, etc., I mean, I can't think of a better set of circumstances. The FIs continue to be at the margin sellers. Their positioning is reasonably weak. Even today, they are far, far more short than they have been. So from that perspective, I think a contra rally is well and truly underway. We are about 1,000 points away from when we started at 24,200 or 24,300. We are about 1,000 points up from there, but we have some way to go is what I believe.
The contra rally is well underway, and Jake saying it is very, very crucial this time, because people really follow the path that you're setting. The portfolio you're talking about in this landscape, let me just come to that, the portfolio construction. And I noticed that pharma is something that you see as front and center, perhaps, if I'm not saying it incorrectly. Is this more of a defensive play, or is it untapped potential that you see?
Well, pharma, I mean, I think you could, you've put it better than I could have, which is front and center is pharma. It's even from an index weight reasonably low. It's still at a probably index weight of not more than 6.5%, and that was dominated by 2 or 3 stocks there. The ownership levels are very, very low in pharma still. Apart from which, I think the generics is actually a lifesaver for the US markets, for the US consumer. And I think, my own orientation is that of taking a contra bet in this from the perspective that people have viewed this largely as trading plays, and in many cases, event-led plays, like whether there are FDA approvals, etc. I think pharma has made, in the last several years, significantly more strides. There is an entire PLI orientation to some of the portfolios where the local manufacturing and the local self-sufficiency in areas like pencil and G, etc., is uh, a step that the government has taken, which inevitably, as I see, they've already stated this. So this is not something that is completely out of the woodworks. That they will follow that up with minimum import prices. So domestic manufacturing of key inputs, key intermediates through PLI schemes is the way forward. That will supplement a lot of the generics and the manufacturing, should I say, the ecosystem that it supports, both from the manufacturing of generics and also other formulations, which I believe in the past we viewed these as not significant catalysts. But I think these are pretty major. And while they may be cozying up that India will do with China on certain trade aspects, but I think the Prime Minister's address a few days ago has laid to rest any doubts that we may have had about self-sufficiency and Atmanirbharta, as he calls it, that we need to manufacture what we want to consume. And if pharma intermediates, you don't want to be at the mercy of China. China recently has attempted to drop prices with a view to sort of shake up our industry. But if anything, it has only sort of added to the resolve that minimum import prices and other protection will happen where domestic manufacturing is being pushed. In addition to this, there are a lot of private equity owned pharma portfolios in different parts of the world, which are up for grabs as these private equity folks come out. You must understand that many of these were acquired in low interest rate regimes 4 or 5 years ago. And the fund life may have played out, but more importantly, interest rates are up now. And therefore, many of these portfolios will be up for grabs. And I think as long as companies acquire this with prudence in terms of paying reasonable multiples only, I think Europe, especially Eastern Europe, will be a big play for pharmaceuticals, especially generics, as also, of course, the expansion of certain facilities that people may have in the US. So that's like a long explained explanation for why pharma. Apart from which, I think the other front and center, to use your phrase, would be the banking and financial services. I think there's going to be massive consolidation in the NBFC space because the NBFC growth is largely predicated on leverage, and leverage comes with personal guarantees that most private equity stroke individual promoters do not want to partake with. Therefore, if there is no if there's no personal guarantees coming through, leverage is a problem, then effectively the growth in some of these NBFCs is a question mark. So these NBFCs will either consolidate with each other or more importantly, consolidate into banks. Therefore, small private...
Jakes, good morning. This is Hiral Desai. That's a very interesting point that you make, where you're saying that your NBFCs will either consolidate with each other or consolidate with banks. If you could give us a few names and examples of what are the potentials that you see. I know you would not talk stocks, but just an idea of what is that size of NBFCs where you see consolidation happening, number one. And do you think that the FDI inflow, which is now expected to come back potentially, if that comes back, would it be BFSI as a sector, which would then see this FDI inflow as well?
Absolutely. I think any country in the world where FDI is either encouraged or as FDI actually comes through, the BFSI is the first, if you will, destination for that capital. I see money coming into private sector banks. But to add to that point, I mean, when you see examples, there are NBFC portfolios that are being sold all the time. But recently, a company that got acquired by Ugro Capital, which is a first generation entrepreneur created NBFC, Ugro acquired a company called Profectus. It may have been at a multiple of 1.1 time because multiples in the NBFC space have also contracted. Now, Ugro effectively becomes a larger NBFC as a result of its Profectus acquisition. But this is the kind of play that there is. So there are multiple names in this space. I mean, names only illustrate, where deal making could happen, and that's not appropriate for me to talk about. But essentially, NBFCs to consolidate into each other or into banks. That's the theme. And foreign capital will come into private sector banks, which can effectively hasten the theme that I talked about, which is NBFC consolidation.
Jakes, the other, I think the bus that we're missing is the AI boom. Look at what's happened with Nvidia last night, and between Nvidia and OpenAI and that whole, the sort of virtuous cycle or whatever you want to call it. That's the big push in the United States. India has perhaps missed that party altogether. Do you see a potential over there from the Indian context and the portfolio that you're talking about?
So I'll tell you what we may, in a sense, I think, I'm a great fan of what the IT services companies have created. And these companies have been actually created with a view to handling, services and, to put it loosely, to some extent, we may be uncharitable in saying labor cost arbitrage. But having gone past that, size and scale has been created, transitioning of systems from one to the other have been handled by them, multiple geographies are being handled by them. Maybe the investment in pure product and pure research orientation, which multiple companies, of the Microsoft and the Google types have done, where they've invested, tens of billions of dollars in actually primary research, that may not have been done. But what that has essentially ended up doing, and DeepSeek has actually been a great champion of this, which is to say that maybe not the best product, but Me Too products are available where any LLM, large language models, are able to create a wonderfully sophisticated assistant for improving tasks which are done by rote. So if repetitive work is in a sense eliminated or made better with AI to that extent has now become, is almost getting commoditized in terms of the APIs or in terms of the agentic.
Very quickly, because I'm almost out of time with you. You started by saying you have a maybe more favorable view on IT companies in India than the market seems to have right now. A bit of a recovery, but nevertheless. Between
No.
AI, H-1B visa, do you think that there's scope there?
No, that's not the point I made. I think the point was that the disruption that AI can create is still calculation in the works. And I think the IT companies have far more to lose with AI disruption than otherwise. But where India is not missing the boom, if you will, is a number of user industries using AI to make productivity higher and to make their efficiency higher, if you will. So from that perspective, AI is still something that I think we are going to be using, and a lot of industries, a lot of companies are doing so. Maybe not IT services to the extent that we would like them to do.
Okay, fair enough. And Jayakumar there, breaking it all down and making sense of very tough times. Thank you, Jake. It's always a pleasure to have you.